Hello everyone and welcome back. In this video, I will discuss ISA 501 audit evidence, that is specific considerations for selected items. In ISA 500, we learned the general principle of audit evidence. However, in practice, some areas require special attention because they are more complex or carry higher risk. Therefore, ISA 501 provides additional guidance for specific items like inventory, litigation and claims, and segment information. First of all, inventory, which is often a significant and high-risk area. When inventory is material to the financial statements, the auditor is required to attend the physical inventory count. Now, you might ask, why is this important? The answer is that inventory quantities are usually determined by management, and therefore there is a risk of overstatement or miscounting or fraud. By attending the count, the auditor can obtain reliable audit evidence. During the inventory count, the auditor must evaluate management's instructions and procedures, observe the accounting process, inspect the inventory, and perform test counts. In addition, the auditor should verify whether inventory is properly labeled, damaged, or obsolete items are identified. Therefore, the auditor is not just watching, the auditor is actively evaluating the process. However, sometimes the auditor may not be able to attend the inventory count. For example, like inventory count occurred before audit appointment or there are practical constraints. In such cases, the auditor must perform alternative procedures such as reviewing records, performing counts at a later date, reconciling movements. If sufficient evidence still cannot be obtained, then the auditor may need to modify the audit opinion. Next, litigation and claims which involve legal disputes. These are important because they may result in significant liabilities or provisions or contingent liabilities. Therefore, the reader must obtain sufficient evidence regarding whether such obligations are properly recorded or disclosed. To identify litigation and claims, the auditor should inquire from management and review board minutes and also examine legal expense accounts. Furthermore, the auditor may communicate directly with the entity's legal advisors. This is usually done through a legal confirmation letter. However, if the legal advisor does not respond, the auditor must perform alternative procedures. Nevertheless, if sufficient evidence cannot be obtained, this may lead to a scope limitation, and therefore a modified opinion may be required. Finally, segment information. Many companies report financial information by segments such as geographical areas or business divisions. Since this information is important for users, the auditor must ensure that segment disclosures are in accordance with the applicable financial reporting framework and methods used to determine segment information are appropriate. The auditor should understand how management identifies segments and evaluates consistency with financial statements and also tests allocation of revenue, expenses, and assets. Therefore, the auditor ensures that segment reporting is accurate and meaningful. At this point, it is important to understand the overall theme of ISA 501. Unlike ISA 500, which is general, ISA 501 focuses on areas requiring special audit attention. These areas are high risk, judgmental, and difficult to verify. Therefore, the auditor must apply additional procedures and professional skepticism. To summarize, ISA 501 provides guidance on specific audit areas. First, for inventory, the auditor must attend physical counts where possible. Next, for litigation and claims, the auditor must obtain evidence regarding legal obligations. Finally, for segment information, the auditor must ensure proper disclosure and consistency. In conclusion, ISA 501 strengthens audit quality by ensuring that high risk and complex areas are properly addressed. That's all for today. Allah Hafiz.